Is investing in transaction capital an opportunity of a lifetime? This is the question that I've been asked quite a few times, and I've been asked to analyze this company. If you haven't heard of Transaction Capital before, Transaction Capital Limited is a South African-based investment holdings company that identifies and invests in alternative asset classes, and the company identifies, invests in and operates a diversified portfolio of high potential businesses. Its segment consists of SA Taxi, Gomo and Newton. You've probably heard of WeBuyCars before, and currently WeBuyCars makes up a whopping 43% of Transaction Capital's earnings. In this video, we are going to analyze Transaction Capital and decide together whether it's a good investment or not. Let me know down in the comments if you think that this is an opportunity of a lifetime or what your thoughts are about this company. With that said, let's jump into it. So what I like to do is to always download the latest results of a specific company that I'm analyzing, because there's quite a lot of insights in their annual reports or half year reports. In this case, it's the half year results ended 31 March 2023, and we're going to jump straight into it. There's obviously quite a lot of things to go through, but I just want to show you the performance overview, and this is a quick summary of what's going on and what's happening with the company. All I want to show you here is something very important, and that is the headline earnings per share is decreasing by 355%. So they are losing money at the moment. So there's obviously a lot of information in this report, and if you have the time, go and read through it, because there's a lot of information that's necessary to understand before you can invest in this company. I'm not going to go through it. I just wanted to show you the companies that is owned by Transaction Capital. One which is Newton. The second one is WeBuyCars. It has a very good outlook, and obviously they have the SA Taxi business and Mobilis. I'm not sure how to pronounce that. So these are basically the businesses, as well as Gomo. You can go and take some time to read up on the business. Make sure you understand how they operate, how they generate income, what's the risk involved in that specific business. But for the purpose of this video and to keep it as short as possible, we are not going to do that. What I am going to do is I'm going to jump straight to Stock Unlock, and I'm going to search for Transaction Capital, and from here I'll share my thoughts. So if we have a look at their share price, if we click on the max chart, we can see that the company reached an all-time high around 2022 April, and currently we can see that it is down a whopping 88% from its all-time highs. So there's a lot of people that keeps piling their money into this investment, thinking that they can make a lot of money because it's trading at a very low price compared to its all-time high. Just because a share price is low doesn't mean that it is a good investment. This is something that we really do have to understand, because the share price is usually low for a reason. With that said, let's assume that there is value in the stock, and we'll analyze it to check if it is worth our hard-earned money. If we click on the Insights tab, we can see a few things, and one of which is a lot of red. A quick blurb of this company is that Transaction Capital has negative free cash flow of minus 4.23 billion rand, which means it is currently losing money. Also, it has a current cash runway of 5.21 months, and the cash runway is the amount of time the business has at its current burn rate before it will need to take on debt or dilute shareholders to raise more money. So if a company has a certain amount of expenses every month that they need to pay, this company has enough cash to last them let's say 5.5 months before they need to raise capital or dilute shareholders or take on more debt. So this is really common with higher risk businesses, but it's really not a good sign. Personally, I like to invest in high quality businesses, and I'll much rather pay a premium or a fair price for a very good company instead of paying a low price for below average companies. With that said, we can see that the financial health of the company as well as the growth is one of the biggest issues here. We can see the cash runway of 5.21 months, which is very bad. It has a current ratio of 2.45, which is very good. Intangibles as a percentage of total assets is around average. And another negative thing is that its shares is increasing, meaning that it's diluting shareholders, which reduces shareholder equity and reduces our chance as investors to make money. So increasing shares is not a good sign. This is something that I generally stay away from. When we go to growth, we can see that the revenue is increasing, which is a very good sign. Its gross profit is increasing, which is a very good sign, but that alone doesn't mean that it's a good investment. Its operating income, which is very important, is decreasing by a rapid rate of 102%. Its net income is decreasing at 114%, and its operating cash flow is decreasing. So the three important bottom line margins are decreasing, and this is not a good start for this company. Profitability has a score of 1.43, where it shows the gross margin is 17.24%. Generally, I look for companies that has a gross margin above 50%, which means that their net margin will be pretty healthy. They have a negative operating margin, a negative net margin, a negative free cash flow margin, and they currently unprofitable. Being unprofitable is not something that I'm willing to invest in. And I really do understand that they have been going through some difficult times. That doesn't mean that I have to invest in a company or that you have to invest in a company just because the shares are trading lower. When we click on the insider tab, we can see that there's a lot of buying happening in this company. So there's a lot of people that's actually buying the shares and large amounts. So we can see 125 million, 96 million, and so on. So a lot of people is actually buying the company. This is something that you can take with a grain of salt. We don't really understand what their strategy is and why they are doing this, but it just helps to show that insiders are actually buying. When we click on our financial tab, which is a really important part of investing, the financials is something that really doesn't lie. There's obviously all of this fancy ways to analyze stocks and to determine whether it's undervalued and what the intrinsic value of the share is. But what I like to focus on is the numbers in a financial statement, because the numbers never lie. If we click on the yearly results, we can see on their, let's just start with the income statement. We can see with their revenue that it has been growing, which is a good sign. And from 2021 until 2022, the full financial year, the revenue really skyrocketed. Although this seems great, just have a look at the cost of the revenue that also skyrocketed. So when the top line, which is your total revenue, grows, we hope that your net income, which is your bottom line, can grow as well. And if we have a look at the net income, although the company received massive revenue growth, we can see that the net income is down from the previous year. And this is quite troubling to see. And I'm not sure exactly what the specific reason is for this. But like I said, in 2021, they generated 8.8 billion Rand in revenue, and their net income was 2.2 billion. In 2022, they generated a massive 25.9 billion Rand in revenue, but their net income was less than the previous year of 1.6 billion. This is quite troubling to see, and I don't really know why this is the case. If we go to its balance sheet, we can see that it really has a healthy balance sheet with a lot of assets, and the total current assets is much more than the total current liabilities. Just because they have a solid balance sheet doesn't necessarily mean it's a good business. It just means that financially they are in a good place in the short term. Long term, it might be different as well. If we scroll down to shareholder equity, we can see that the shareholder equity has been increasing steadily up until the 2021 financial year, and suddenly it has been declining. Obviously, when shareholder equity decreases, it is not a good sign for investors. They have a decent amount of retained earnings, but also it has almost halved in the last year. When we go back and have a look at the cash flow statement, this is where everything seems to be falling apart. So cash from operating activities is the money that the company generates from their actual income. Something that really scares me is that the last time the company has actually generated money from its operating activities was in 2011. Basically, more than a decade, it has been losing money from its operations. And I'm not sure how a business can actually survive doing this, but obviously they have been surviving, so what do I know? This is just something that we need to understand, because a profitable business is a business that can grow and especially grow through tough times. Again, when we scroll down, most of you know that I always look at free cash flow, and free cash flow has been in the negative since around 2011 as well. So the last decade they have not been generating free cash flow, and without free cash flow you are not able to grow your business unless you dilute your shareholders, which is not a good way to grow your business. With that said, I'm going to jump to the freeform tool. If we click on price to free cash flow, we can see that they don't have it's zero, because they're not generating free cash flow, and on average it's 0.4 price to free cash flow and a high of 9. So basically the company is not generating cash flow. So how do you even determine what the hell this thing is worth? And let's have a look at price to operating free cash flow, and it's exactly the same issue. Let's leave that and have a look at their revenue. Let me just add this, and we can see how much they have been growing their revenue, which in hindsight is great. But let's just add the net income. And this is where things starts falling apart again. And we can see, although their revenue has grown tremendously, their net income is actually declining. I don't really understand this. I don't think this is a good indication of a good business. There's a lot of good companies out there that you can invest in. And one that I wanted to show you is Remgrow Limited, which is a pretty big company. And although we can't really compare them head to head, I just wanted to show you something that's quite interesting to look at via this graph. So we have the revenue and we have the net income for both the companies, and just try to follow along. The net income and the revenue for Remgrow is light blue and green. So here we can see that the revenue of Remgrow is quite high, and the amount of net income that Remgrow generates is almost as much as the amount of total revenue that Transaction Capital generates. If we have a look at the yearly graph, we can see that it comes pretty close to the total revenue of Transaction Capital. That, in my opinion, is quite intense, and I feel that instead of investing in a company like Transaction Capital and taking on a lot of risk with the hopes that the company can go back to its growth phase and generate free cash flow, I'll rather invest in a better business and pay a fair price instead of trying to scoop up a bargain hoping that it can generate a lot of money, where with a company like Remgrow, for example, we can see that they are already generating a lot of money. With that said, I hope that this video can help you decide whether it's a good investment or not. Personally, I am not convinced that the company is going to grow its operating cash flow as well as its free cash flow. And personally, that's what I like to invest in. So feel free to let me know if I maybe missed something. What are your thoughts about Transaction Capital? One last thing is that I do offer one-on-one sessions where you and I can run through the fundamental analysis part of investing in a company like this, and we can sit together and go through all the details to determine if a stock is a good investment or not. And I'll be offering a 10% discount to anyone that uses the word transaction capital in the comments or via email. So feel free to reach out and maybe we can connect and help each other grow.